Thank you for joining us today for Organizational Types and Considerations for Small Businesses, brought to you by California's Women's Center's webinar program and hosted by Canterbury Business Center. Today, our instructor is John Ismedio from ICE Tax Pro, and John has an MBA from the University of California at Riverside and a bachelor's degree in accounting. Welcome, John. Tell us a little bit more about yourself.
John is Mario. I have been blessed to work with this wonderful organization, Canterbury. I highly recommend that you keep in contact with Canterbury, whether it's Ruth, whether it's Irma, Irene, everybody, Juliet, everybody's just awesome. So let's get going here. Thank you all. So organizational types, for small businesses. Here we go. So the agenda. So the disadvantages and advantages of the types of entities that you can form. So you have sole proprietors, partnerships, LLCs, S corps, C corps. Now, the first thing I want you to know is that and sole proprietor happens to be, they usually call it a sole proprietor, but also call it DBA and also call it fictitious business name. So it can be, sole proprietor can be explained or described in 3 or 4 different ways. So whenever you hear sole proprietor or you hear DBA, it is a sole proprietor. The minute you have 2 or more people, you need a partnership. And the partnership usually starts off with a partnership agreement so that both parties, assuming there's 2 people, if there's 3 people, 4 people, however many people are part of the partnership, you need that partnership agreement to make sure that everybody knows where they stand. LLCs. So now I'm going to talk about these entities. So LLCs, limited liability companies, C corporation and S corporation, all of them, all those 3 will allow you to have a corporate veil, which is a fancy word of saying that your assets are protected. So let's say that I have a house of my own. John Ismerio has a house, but I have a business. The minute I have a business, if the business is a sole proprietor and I get into some sort of illegal battle with a XYZ company, they can go after the beautiful house that I have. However, if I actually have the house and I'm a CEO of or president of my corporation or LLC, the corporation is liable only for its activity. The person that is attached to the corporation or LLC is not liable. So that's one of the wonderful things there. All right. So let's talk about organizational types. Well, I kind of already went over this, so I don't want to repeat myself. So let's go over here. Okay. So the most important thing is, I think that last bullet that says expense, formality, cost, legal complexity, things of that sort. Listen, setting up a DBA, which is a sole proprietor, is the simplest thing you can do, but you're 100% liable. Same thing for the partnership. Partnership is basically a sole proprietor, but there's more than 2. So therefore, you're liable for everything. Now, the C corporations, LLCs, and S corporations are a bit more complicated to set up. And that's the part where the last bullet that I like to concentrate on That's where I like to, start talking about the complexities. So let's see if there's, let's see, risk, taxation. Okay, let's talk about taxes since it's tax season. Um, tax, taxes can be a daunting situation where you get hit with, let's say you make $100,000 and that's your net profit. And if you're a sole proprietor, you're paying basically 28%. If you're a corporation, you're actually paying 21%. So for me, it's important to be an S corporation when you're a small business owner. If you're a large corporation, it's always better to be a C corporation. Remember that C corporations and S corporations are a little bit different. A C corporation allows you to be allows you to have double taxation. What that means is not only does the corporation pay taxes, but the dividends of the people that take part of or are part of the board also pay taxes. So you might say, well, I don't want to be double taxed, so I'll be an S corp. So the S corp will um, have a flow through. A flow through is K1, and the K1 will be injected from the net profits of your corporation, and it'll come in as a K1. So all that means is it's basically a W-2 that comes from your corporation, and it gets placed inside of your 1040, your typical tax return. So, management, let's see, liability risk. Well, we already talked about that. Management, I don't think we need to go over that right now because it's self-explanatory that you have to basically manage. Um, you know what? I don't think it's self-explanatory. Let me go ahead and dig deep into that. The third bullet, management. Very important to understand that when you're a corporation, you need to start acting like a corporation. Because if you don't manage your entity the right way, if you get sued, if you have a lawsuit on your hands, they can state that you penetrated your own corporate veil and you acted like an individual versus acting like a corporation. So you must manage it. What does that mean? That means you have to file your minutes. Your minutes have to be filed at least once a year. Bigger corporations do it every month. If for instance the Secretary of State states that you have not filed a statement of information domestic stock, then they can decide to have you not be a typical in good standing corporation. So when you're not in good standing corporation, that means you're suspended. So all this is part of management. Now, let me go over the continuity transferability, how a business consists or persists and how it's sold. Okay, so continuity and basically a business that is a sole proprietor gets sold as a person. However, a corporation uh, does get transferred or sold as the corporate entity. So there's different areas that if there's more questions that can go over those things, those items. Let me go ahead and go to the next slide. All right, so what things will impact? Let's take a look. So another review. So sole proprietors is one owner, limited person that's liable for everything. The sole proprietor generally files a Schedule C like Charlie. Schedule C is your schedule that is attached to your 1040, and that Schedule C will tell you what your net profit is, what your net profit is, and therefore you will now, we will find, as accountants, we'll find out what your tax liability is based on that Schedule C. Yes, it's the simplest form of organization and lowest cost. By the way, lowest cost, super low. I know that Canterbury files DBAs for about $100. I don't think there's anywhere on the face of this planet that you can get a DBA for less than that. So definitely check out Canterbury's uh, DBA formation. Okay, and I think Irene handles that through Canterbury. And all right, so basically, it's a small startup. Yes, it's super fast. Let's get going. Let's rock and roll. Let's have print out business cards. Remember, when you set up a sole proprietor, it allows you to actually open up a bank account. And hopefully, most of you understand the value of opening up a bank account. It's not only to open up a merchant account, such as Square or Clover or any of the other merchant services providers, but it's also important to know that you're basically organizing yourself. You're looking like a business. People are starting to treat you like a business. So this is a good step in the right door to getting your business off the ground. All right, next one. So a general partnership is basically a sole proprietor with more than one person. So in this case, at least two people. Same thing. You share risk, you share costs. Let's see. Of course, there's a pass-through taxation. What that means in our tax language is that the 1065, which is basically the 1040 is what everybody knows. 1040 is for your personal income taxes. Now the 1065 is the tax return for the partnership. The 1065 will issue out a K1. The K1 acts like a W2, and that passes through into your 1040. So your 1040 will have, remember that I told you that a 1040 has a schedule called a Schedule C when you're a sole proprietor? Well, the 1040 of a person that's part of a partnership does not have a Schedule C. However, they do have a K1. K like kilo, and then the number one. So that K1 will tell you how much your net profit was, how much donations you had, and so on and so forth. So all these type of pass-through deductions can also be placed inside of your tax return. Your tax return, that would be the 1040. All right, so risk, I already told you that the risk is very clear. Just like a sole proprietor, you're open for lawsuits. So be aware of that. Let's move on. So LP, limited partnerships and limited liability companies, they all act the same. Let's see. Okay, So very similar to, by the way, Irma, are there any questions at this moment? Because I feel like I'm just, Irma? Okay. All right. So
No, John, no questions.
no questions. Okay. I just didn't want to go too fast. If somebody has a question, please let Irma know. Hey, Irma, I have a question. Here's my question. But anyways, as we go into LLCs and LPs, it basically means that your company can be protected by having the assets or the monies in the bank accounts separate from your personal assets, whether it's your personal bank accounts, a house, um, a condo, whatever it is. The business is separate from you. Okay. Yes, it does require a partnership agreement. Highly recommend a partnership agreement, especially for a limited partnership. And I always, I mean, at the end of the day, the minute you're doing business with a second person, that means you're not doing business just by yourself. The minute somebody comes on board, even if they're at a small percentage, what do I mean by that? Most people will get together and they will say, okay, let's do this together. Let's do this 50-50. But there are other partnerships that you start with, like, you know what? I am the majority person. I have 90% and you only have 10%. Even if you have a majority minority type of agreement, always, always, always have a partnership agreement. I think I already went over that. Let's see it. Okay. I think I already went over that. I don't want to double. Let's go legal. Okay. That looks fine. I already went over that. All right. So let me re-emphasize the C corporation. So limited liability basically means if there's something going on with the business takes a hit if there is some sort of lawsuit. However, the person that acts as a shareholder does not. The next one, company is taxed or double taxation is an issue. Correct. Double taxation is an issue. All C corporations are double taxed, and they have to pay tax on their income, just like a 1040. On your 1040, you pay taxes on your AGI. AGI stands for adjusted gross income. So not only does not only does the C corporation get taxed at the corporate tax level, but the people that are shareholders and they receive a distribution as a dividend also get taxed. So that's why it's double taxation. Yes, it is complex to form and complex ownership. Okay, so perhaps two of the most complex things to set up is definitely a C corporation and an S corporation. Something less complicated would be an LLC, although it is more complicated than setting up a sole proprietor and general partnership. All right, so let's go to S corporation. By the way, as an accountant here in the city of Burbank, and if y'all ever have a question, you can always look me up on Facebook as johnnyismario@gmail.com. So that's JOHNNYISMARIO and YISMERIO, Johnny Ismerio. And that's my email address as well, John Ismerio, JOHNISMERIO @gmail.com. My website is istaxpro.com. That's spelled ISTAXPRO.com. So at this point, we have S corporations. So the most beautiful thing about an S corporation, which is the majority of the clients that I have, is that there's no double taxation, and the corporation, the S corporation, does not pay taxes at the federal level. So you might say, what do you mean by the federal level? Remember that a C corporation pays taxes at the federal level, but an S corporation does not pay taxes at the federal level. It passes it through to its shareholders. So let's do a basic example. Myself and my sister, we both are 50-50. Let's say our S corporation has a net profit of $100,000. So that means that I get a K1. The K1, John, receives a K1 for $50,000, right? Because we're 50-50. We made $100,000, and I only get a K1 for $50,000. My sister, however, her name is Janet. She also receives a K1, and she's only responsible for the $50,000. And that is the lingo of what a pass-through entity is, and that would be an S corporation. Okay.
John,
Yes.
we have a question, and
Yes.
the question is, can you switch from sole to LLC in the future, and can you start as a sole, and then when business becomes more established, become an LLC later on?
Sure. So that's a frequently asked question, and I want you to understand the following. Everybody, please pay attention, write your notes. When you start a business, my personal, by the way, I've been doing this for 18 years. I've seen every possible situation imaginable. The first thing that I would say is get to work and set up at least a DBA, which is a fictitious business name, which would by default make you a sole proprietor. Okay. When you set that up, and let's say business is good, you're making 50,000 the first year, net profit, right? Net profit. And then the second year you made 75,000. The third year you make 100,000. And then you're scratching your head. What in the world? Why am I paying 28%? And if you have a good accountant, they're going to say, you know what? You actually could be paying 21%. So you'd be saving about 7%. So why don't you become an S corporation? So that's when you close down your DBA, which is called, by the way, I don't know if you guys do this, which I would imagine you do, Irma, that I don't know if Irene does this, where it's called the dissolution of dissolving a DBA. So we'll wait until she answers that. I believe she would do that as well, because that's a similar transaction as a DBA with the county of LA of LA. But anyways, you would have to dissolve your DBA, and then you would have to incorporate, whether it's an LLC, a C corporation, S corporation, whatever you decide, you basically have to start all over again. So there is no transfer. Oh, I'm a sole proprietor and now I magically will become a corporation as corporation, C corporation, LLC. No, it doesn't happen that way. No. The answer is no. You cannot transfer a DBA, fictitious business name, that is a sole proprietor, and all of a sudden convert it into a corporation. So you must close your DBA. Once it's closed, it's dissolved, then you can open up your corporation so that you're now paying 21% instead of 28% on an example of $100,000. Does that answer your question? Irma? Okay, so I'm gonna go ahead and move forward. And so what, this is a very typical question. What's the right thing for me to do, right, for my business? So I'm gonna answer this question right now before I get to the next slide. The best answer for you is you have to know what your net profit is. By knowing your net profit, it will tell you whether you should be a corporation or a sole proprietor. If you're just getting your feet off the ground, definitely, without a shadow of a doubt, be a DBA, a fictitious business name, and as a sole proprietor. Or if you're opening it up with your buddy, or with your sister, with whoever, become a general partnership. It's that easy. Okay. So,
and John, you were asking a question about whether we at Canterbury provide that service. For the audience, this is not just a local webinar, it's across the United States. There are 13 women's business centers across the United States in different areas, so those services may be provided by women's business centers across the state. We do that in the Los Angeles area for those that are in the surrounding greater Los Angeles area. But for those that are not, there are women's business centers that that can handle that for you.
Very well. Okay. So there's 5 key points that they want to we want to show everyone: the organization type, match your legal structure, tax liability, management, things of that sort. Most common would be, of course, the sole proprietor. So right now, I'm just kind of skimming through this slide because I've said a lot of the things that I've already said. Obviously, I've said this because I've done this for 18 years. So I know this topic inside out. So that's why I'm kind of scanning through this slide. So I feel like I've covered most of it.
So John, we do have one more question.
Yeah, go ahead.
And that question is, so does anything change once you dissolve the DBA? So I'm not sure, Cynthia, if you want to clarify, what do you mean by anything? Do you mean, give me a little more on that question so we can ask John.
So what I'm going to do, Irma, while she's typing it out and figuring it out on her own, I'm going to just go ahead and tell you the bare minimum that when you have a DBA that you're closing, fancy word is dissolving, you have to not only dissolve it and you have to publish it in the newspaper, et cetera, but you also have to close the bank account. So for instance, let's say I worked for 3 years as a sole proprietor. In my example, remember I had an example, first year I made 50,000, second year 75,000, and then the third year I'm scratching my head and I'm saying, why am I paying 20% if I can pay 21%? Because my accountant told me. So now I am convinced to be a corporation, but I have to close my bank account along with my DBA. So when I close it, basically I just shut the door. Usually when you close it, it's because your corporation is ready to jumpstart and get ready to, get ready to rumble, it's ready to get off the floor. So you're not going to just close a DBA and close your bank account. You're not going to do it until you have the S corporation set up. Now here in Los Angeles, in California, I should say, a corporation generally takes 4 to 8 weeks. During this time, which is we're videotaping this, it is towards the end of January 2020. It's usually taking more than 6 weeks. So imagine I have a business, and I'm all excited. I set up my corporation or LLC, doesn't matter, with my state. In this case, it's called the state Secretary of State. So sos.ca.gov. Once I set that up, it's still going to lag anywhere from 4 weeks to 8 weeks. Right now, the average is about 6 weeks. So I highly recommend that you set up your corporation, but do not close and do not dissolve your DBA before the corporation it's ready to go. As a matter of fact, I would even open. So let's say that my corporation is set up today for today's date. Okay. Remember, I still have to go to the bank. I still have to go to the bank. I still have to open up a bank account and my merchant account as well, right? I have to speak to Square, to Clover, whoever I'm using, and then they still those merchant companies, they're going to actually ask you for your articles of incorporation, which is a fancy word for saying basically your permit for being a corporation. That permit, quote unquote, is your articles of incorporation that are stamped by the state of California in this case, or your state, or wherever you reside. I'm sorry, you reside. So companies such as Square and Clover will ask you, for us to open up a merchant account, we need to see your articles of incorporation. So therefore, you must have that all handy, ready to provide. And maybe Square and Clover are going to take 3, 4, 5 days, 7 days to authenticate you, because they have to double check you against the record of Secretary of State here in California, if you're in a California corporation. Anyways, that can take several days. So not only is it taking me 6 weeks to incorporate, but it's also taking me like 5 to 10 days to get my merchant account ready and my bank account. So once I have all that in line, then I can start dissolving my DBA and closing down my sole proprietor bank account and open up, because at this point my corporation is already opened and ready to go. Hopefully that answered your question. Okay. I don't hear
John
you.
C. She said yes, thanks.
Okay, no problem. All right, so I'm gonna move on because this is very basic. I've already talked about all this good stuff. Summary, final questions, learn. Well, I mean, at this point, it's 12:40. So I want to answer all of your pending questions. I listen, at the end of the day, it's not a PowerPoint presentation. It's your business. It's your ideas. It's your establishing a perfect entity. So, are there any tax questions? Are there any entity questions? Are there um, any licenses and fees? Because we also having spoken about the licenses of sales taxes. So let me just dab into that, because when you have a business that sells products, for instance, here in Los Angeles, well, actually here in California, we are mandated. Like, let's say I sell cellular, I sell let's say I sell food products. Okay, if I sell food products and those food products are hot, warm, made by the kitchen of my restaurant, of course, um, I must charge tax, sales tax for that meal. That sales tax is not paid by the owner of the business. It's paid by the consumer or by the client. So that in here in LA, we pay 10.25% of sales taxes, and that sales taxes we have to pick it up and then send it to the CDTFA. CDTFA here in California is called, I don't even know what it stands for, but I'd have to Google it. Uh, California Department of Tax Fee Administration, something like that. So they are the ones in charge of collecting the sales tax. So those sales taxes must be filed every month, every quarter, or annual or fiscal. Annual is January through December 31st. Fiscal is July 1st through June 30th. So it really depends what they're asking you, how they're asking you to file your sales taxes. And that's, remember, you're going to say, do I need this license, which is sales permit? Do I need this? Well, the question is, do you sell products that are taxable? That's a question. And then if you say yes, then guess what? You do absolutely need the sales taxes to be part of your uh, part of your arsenal of licenses and licenses that represent your business.
John, we do have a couple of questions.
Sure, go for it.
The first one is what is the tax rate for a DBA? Is it different from a corporation?
So what I like to do right now is, you know what, let me do this. So if you just type in tax brackets, as a matter of fact, no, that's not a good one. Let's go ahead and go to this looks pretty good. All right, so let me magnify it so you guys can see it. Irma, can you actually see it from your side?
Yes.
Okay, good. All right. So your 2019 tax rates. Okay. First question is, are you single or are you married filing jointly or are you married a qualified widower? Are you married filing separately? Are you head of household and so forth? So let's say I am single. Is that okay? So if I am single, then the tax rate, let's say I made $50,000. $50,000 would land right on. Let's see if I can highlight it. No, it doesn't. Oh, yeah. So it would start at 39,475, and that would give me a 22% tax bracket. However, if I'm married jointly, then and I also we made, because I'm married, $50,000, then I would be at a 12% tax rate. So those are the tax rates. Now, so those are the tax rates for individuals. Now, what I like to show you is tax rates for corporations.
And while John is looking that up, what the reason that he's looking at that is because doing business as filing your tax rates, it's a personal income tax filing in conjunction with the business as opposed to a corporate filing.
All right. Well, I thought I saw it in here somewhere. Let's see. Okay, so at the end of the day, it's this one here. So the corporate people, they pay 21%. So again, 21% is a pretty cool deal because it used to be 35%. Do you see that here? The Tax Cuts and Jobs Act happens to be what Mr. President Trump uh, put to Congress, and they changed the tax rate for corporations. That's why I think when you're starting to make over $100,000, it's better to be a C corp or an S corp than to be a sole proprietor. So let me go over here. So that was corporation, and then let me go over here. So let's say you made $100,000. So it looks like it would be 24%. Sorry about that. There it is, 24%. And so you would be saving about 3%. All right. Now, if you're married and you also make $100,000, so you would be saving about 1%. But it usually starts helping you out when you are, especially when you're single. So it starts helping you out there. And so that's my thought of corporation versus DBAs.
And then, John, the second question after that is the recommended maximum that you should, if you're making a certain amount of money, at what point do you decide to become a corporation versus a DBA. So if I'm making, consistently 20,000
Yeah, that's a very
versus
common question.
100,000.
Sure. Anytime you start making over $50,000 of net profit, which would be on your income tax AGI, so anytime you're over $50,000, then that's when you start. And by the way, and you're also seeing that your business is going to do well, continue to do well, or even better than last year, then that's when there's no there is no doubt about it. That's when being a corporation makes sense. When it's less than 50,000, it really doesn't make sense. So let's say my next door neighbor wants to open up a business, and they're struggling. Their net profit is 20,000, 30,000, 40,000. It doesn't really make sense to be a corporation at that moment. It makes sense more than when it's more than $50,000.
Terrific. Are there any other questions before we start to wrap up? I know it's about 10 to 1. If there are any other questions, please type them in the chat room. Going once.
So there's still about 10 minutes left. Is there something that you feel, Irma, that they might be interested in, and maybe I can elaborate?
Well, let's ask the panelists. I mean, ask the attendees. Is there anything else that you would like to know about? Okay, we have a comment here about registering partnerships. Are partnerships typically DBAs? Are they LLCs? Is there one better versus the other right from the beginning?
So your question is like multi-question. So let me take it one step at a time, okay? So when you set up a DBA, the county recorder's office asks you a very basic question. Are you going to be a sole proprietor? Are you going to be a partnership? So if you set that up as a sole proprietor or a partnership, it is it basically belongs, um, helps you out to start a business with a second person, third person. But I'm sorry, Irma, I lost my train of thought. What was the question again? Because
So registering partners, which is better to register as if you're going to have a partnership?
you know what, Irma, you went in and out
Oh,
again.
oh, which is better if you were a partnership? Is it better to register as an LLC, as a DBA, if you know from the beginning that you're forming a partnership?
Oh, okay. So when you're a partnership, again, the question is, are you guys gonna, okay, when you guys set up a partnership, if you set up a partnership, I would definitely suggest minimum, at a bare minimum, to set up an LLC. Here's why. There's By being a general partnership, the word general partnership basically means there's two or more sole proprietors involved. So by me as an accountant doing this for 18 years, for me to say the best thing for a partnership, a group of people wanting to do business, I would definitely say do an LLC or a S corporation. And why would I do that? Because first of all, you are liable for anything your partner does. So I know you're best friends with your partner. He's he or she is your your best friend. You're the person that you'll go to bat with. Listen, one thing is for sure: when it comes to money, you need to have things in order. You don't want to shortchange yourself just by saying, "Oh, I trust my partner," and no, it doesn't work that way. Make sure you have a partnership agreement or a membership agreement, which is partnership agreement is for partnerships, member agreement is for LLCs. By the way, a lot of partnerships, when they become LLCs, they don't know that their new name is member. For some reason, here in the state of California, any people that belong to a LLC are not called partners; they're called members. So you need to know the lingo with that. Hopefully that answers your question.
And then one last question, John. Is there some place where you actually register a partnership agreement, or is that something that's just becomes part of the Articles of Incorporation?
Okay, so let's make sure we don't mix and match. Okay, so when you have a partnership agreement, I highly recommend that this partnership agreement is done by a professional attorney. Yes, you can go online and you can find cookie cutter options. If you want a cookie cutter result, then that's what you'll have. So listen, if you have a business and you don't want to have any type of issues, go to an attorney, pay their $100 an hour, tell them what you want, and then maybe they'll charge you, they'll charge you whatever their fee is, and then you're going to have a well-written, bulletproof partnership agreement. So that's what I would recommend to have when you have partners. You definitely want to have at least an LLC and always have a partnership agreement.
Terrific. So folks, as we close up, I would like to thank John for those of you that attended. We appreciate you being here. We appreciate your questions, and we would love to welcome you to our next webinar, which is Financial Projections for Small Businesses. And that will be Wednesday, February 5th at 12 p.m. Pacific Standard Time. There are, as we mentioned before, California Women's Centers across the United States, and there are 13 specifically in the state of California. In addition to that, John, thank you so much. I know that that your wealth of information is much appreciated. And if there are no other comments, I'm going to go ahead and stop the recording. And thank you so much to all of you for attending once again. I think that that John, if people reach out to Canterbury Business Center at gmail.com, they can reach out to us and ask more questions. We will forward those questions to you. And have a great day. If there are no other last comments. We will be sending the recording out to those who signed up, and if you'd like for other people, please share the next webinar information with anybody that you would like to. It was appreciated. John, Thank you so much.
My pleasure. Thank you very much for having me.
Have a great day.
Likewise. Thank you.